Good morning, everybody. I hope you had a great evening. It was another hot one here. Give you an idea, I got back from boxing about 7:30 last night, and it was 96 degrees with humidity at 73%. So this is like being in Mississippi, Columbus, Georgia, Jacksonville, Florida, Houston, Texas. Not used to that kind of humidity. Makes you appreciate air conditioning for sure. Okay, today the biggest news item is going to be the FOMC. That announcement comes at 2. Yellen will not speak. It's expected to leave policy unchanged. And I don't know what kind of language. The Fed has been running trial balloon up after trial balloon that going to increase interest rates as early as September. Better than 50-50. They might be accomplishing what they want to accomplish just in that speech, those announcements, those trial balloons. It's very difficult for me to see how they can even think about raising interest rates given how fragile the world's economy is right now. And China's stock markets, depending on which one you follow, have corrected over 40%. Bear market corrections are 50 to sometimes as much as 90% if you go into depression. So this is the one bright spot in our economy. It's the one thing that they can point to. It's the one thing that gives everybody hope. Well, the stock market's good. Maybe things will get better tomorrow. So they're really walking a tightrope there, and I frankly don't see how they can raise interest rates in a meaningful way. The markets say first interest rate increase comes in the first quarter of 2016. Markets changed their minds. At the end of the first quarter of this year, they had an interest rate increase in the fourth quarter of 2015, so it slipped a quarter. So the stock market will be looking for dovish language in their announcement. They'll be, they're going to say we're going to raise interest rates when the economy warrants, but we're concerned about whatever, China's markets, the slowing in global activity. We don't know what it'll be, but the stock market's playing for a dovish statement. A lot of the selling in our market, the financials or treasuries, have already been done in anticipation of a rate increase. So the biggest, the surprise, unexpected piece of news would be an interest rate increase as of today. If that were the case, the bottom would fall out of treasuries and out of the stock market, and if you're long, you'd have to dump your positions. If they say, if the language is hawkish, September, October, rate increases on the table coming, treasuries would sell a little bit, and so would the stock market. If the language is dovish, the stock market is rallied in anticipation of that, and we're right here. We'll be stuck in a trading range. So an unannounced interest rate increase at this meeting, and the Fed can do anything they want, would be surprise, unexpected news. And if you were long, you'd have to dump your position at the market and just take your fill wherever you could get it. Pending home sales, nobody pays any attention to, plus 1%. Number could come in higher than forecast. Crude inventories plus 100,000 barrels. Excuse me, minus 100,000 barrels. No one will pay any attention to that. Even the crude market won't pay any attention to it. Doesn't seem to make any difference what that number is, up or down. If it's normally a bearish number, the market usually rallies. If it's a bullish number, it usually breaks. So hard to say how that will play. So the focus is the FOMC, preceded by the 5-year auction. Okay, the market, 29.5, 30 is where the auction price was yesterday. That usually the short end sets the benchmark. That typically the market rallies on that. Yesterday it was sideways. If there's a weak auction, it's the intermediate term. If history repeats itself, and then sideways to higher into the third auction. All tempered by the FOMC. So Right now, I think the market will find buyers. I'd like to buy the 17 to 21. I prefer the long side. We'll put a question mark at 25, but that'll be buy 1. And then 9 to 13 will be buy 2. On the sell side, selling 28 to the buck. Might take a 27 to get in. We'll put a question mark there. And then 3 to 7. Why am I a buyer of treasuries today? Given that we had a B on yesterday's action, at some point the 5-year auction will kick in and the dealers will have to buy the market support it to move the paper. No more complicated than that. There's your correct split right there. Combine the overnight with yesterday's, you see we're clearly looking at a B. New distribution down started at 54.28, then we spilled from 19. 16 was the last rotate up, so 15 to 19 is sell 1. 27 to 31 is sell 2. Okay, the volatility in this market is decreasing. We had a period there where we were getting 2 to 3 point days. Now it looks like it's a point, give or take a little bit. So this will put a premium on our order entry. Our retest failure trade leaning against that pivot high or pivot low is where you're going to have to put your orders to execute and have trade location. Otherwise you're going to cut down your trading target. Okay, buy 1 to 5, and we'll put a question mark at 9. And then 25 to 20. Well, let's see, this breakout came down here. We'll make it 21 to 25. Okay, gold. Another quiet night. We anticipated that given the FOMC announcement today. Now, one of the things that we've learned over time is that if anybody knows, the gold market knows. And right before the FOMC announcement comes out, you'll see a play in the gold market. That almost always is with the news. If we're in a situation where we've got a lot of rumors that are driving the market that you'll read on the financial news wires, then a lot of that is just supposition. People by guessing and by gollying. So we're in the same situation that we have been. This 90 area is pretty good support. So 90, 92 by 1. 85, 87 by 2. Would like to get that trade on below this high volume number right there. There's the tipping point. 98 to the buck, sell 1. That's pretty much where we were last night. Then 4 to 6, sell 2. Euro is up. Yen was close to break even. Euro is holding the gains from yesterday. And the information that's dribbling out of the negotiations that are supposed to take 3 to 4 weeks is that the creditors are demanding more security and more cuts. So we'll see. Greece will just, whatever they say, they're going to sign. They don't have any choice. So we're kind of probably in a trading range for until the Greek deal is inked, which could take upwards of 3 weeks, 4 weeks, or more. These guys are really good at kicking the can down the road, especially when it costs them money to not kick the can down the road. So 1075, then the buck, 111 even, where we're looking to be sellers, and on the buy side 1025 and 110 even, plus or minus. I just look for a trading range. Don't expect much. Crude oil, we have a seller in our 48 and a quarter area, and then 50 to 75. We have a buyer against 47, so 47 and a quarter, buy one, then 46.50, 75, buy two. Now today is the EIA inventory report. Rich Genders, if he trades on a day like today, turns his dome off before the news hits and walks away from the screens, because it is a very, very squirrely market. And fundamentals, as far as the inventory reports are, don't really have, they usually have the opposite effect. The long-term direction of this market is lower. We've been looking for a retest of at least the 45 area. The reports we get now are pretty bearish because the market is selling. If the market's down, they have to ride it from a bearish slant. If the market's up, they got to ride it from a bullish slant to maintain credibility. So we're seeing oil prices are headed lower and will remain lower for quite an extended period of time. That's pretty much the gist of the articles. Some guys are forecasting 30 bucks. Some people are saying 40 to 45 will hold, and we won't know till it's over. Okay, to the E-mini. We talked about this yesterday. We said the tendency of the E-mini is to rally into the FOMC announcement the day before and the day of. So as we get closer to the actual announcement, we'll probably see a little profit taking from those people that got long early yesterday. And so I look for a sideways market. 95 to the buck will be resistance. We're high. It'll be pretty easy if they got dovish language. We're in a situation to make new highs on this move. And yes, it's in defiance of slowing macroeconomic news around the globe. But as long as the Fed wants the market to trade sideways to higher, it will. And central banks have a lot of clout, as you've seen in China. They've been able to stop the rout. They haven't been able to get people to come back and be new buyers, but all sorts of pressure. Institutions outside of China have been admonished not to be sellers and not to say negative things about the Chinese economy or stock market. And you know, if you want to do business in China, you have to play by their rules, and if they don't like what you say, they'll shut you down. And so our major news outlets and pundits and the rest of it are keeping their mouths shut, or they're toning down their rhetoric. Well, that's where we have it right now. I've got an up bias in treasuries from a lower starting point. Right now, I see support 80 to 85 and resistance 95 to the buck. I think we'll trade that range into the FOMC announcement. That's all I have for right now. I'll be back with you as soon as possible. See you in a few.